What is good, Tesla family? It's Ray J back with another video, and in this one, I'm going to be talking about the one and only Tesla stock and what you should be looking out for the future. I'm also going to be breaking down the CPI report that just came out this morning and why this was extremely important for the markets and why on earth this could actually lead to a lot of changes by the Fed that will affect the markets. I'm also going to talk about what Elon Musk said about the economy, about the markets, as we have some new tweets that came out from him that are very, very important for all Tesla investors and the entire world economy. Now, before I say anything else, before I get into any more details, I do have to mention a couple of things real quick. Firstly, I'm not a financial planner, so don't take any of this as financial advice. And also, if you guys can, please smash the like button if you want to see more videos like this. Not only benefits me, it benefits the entire Tesla community as a whole. And the last things, if you guys can, please check out the Webull link down below in the description. If you sign up for Webull, the link down below, and deposit any amount of money into the account, you're guaranteed 6 free stocks, each worth up to $2,000. And you could always sell these 6 free stocks for cash and use that cash to buy some Tesla shares for free in this limited time offer that ends in just 2 weeks. So please check it out before they run out. With that out of the way, let's get on with the video. So I am actually recording this before the market ended up closing because I do have some plumbing issues and a dentist appointment to attend to, so I won't be available later on. But there are important things we gotta be going over because if you look at the data, okay, right now the whole market is bloody red. This doesn't guarantee we're just going to get rug pulled straight to the floor from here on out. We also have big dates coming, but I want to talk about what actually happened today. So CPI came out, okay? And CPI, obviously, the numbers could be manipulated, which means the true numbers may be higher, but we're just going to go with what the reports were showing. So, excluding energy and food, okay, core inflation rose 6%. The CPI index, however, is up 8.6%. That's insane for the month of May. That's the highest since 1981. Now, I feel like just because I threw this statistic at you, right, it doesn't mean that it's as it doesn't mean that the statistic itself is what's priced in or not. I think that's what a lot of people are getting wrong in this case. They talk about how, oh, it's already priced in, the market's down so much. The answer is, well, we don't truly know that, unfortunately. So when I talk about why this was so important, here's the reason. The Fed is tightening on monetary policy. They're becoming more hawkish. And they're doing this to bring inflation down. But so far, the reports of inflation are not showing it going down. In fact, it's at the highest we've seen. I mean, it wasn't even this high at any point this year. That's not a good sign, in my opinion. Now, here's why it's important. Look at the projected Federal Reserve rate hikes. Okay, the Fed is just raising the federal funds rate. All that does is charges banks higher interest rates. So banks charge the public in return higher rates to make more profit, right? In order to even make a profit. So as a result of that, the cost to borrow goes up, the economy slows down, and this may even lead to a potential recession, right? And this is just one of many factors. But here's the thing. Let me go down to December 14th, 2022. Here's where things get interesting. So these are the probabilities of where the rate hikes will take us. A 2.75 to 3% now has a 21% probability, and we saw an increase in the potential rate hike we are going to end up with. So let me show you right here. Last week, okay, the probability of us hitting that 2.5 to 2.75% rate hike was about 36%. Now it is 4%. Last week, there was, let's see, it was estimated there was a 45% probability we would see a 2.75 to 3% rate hike in total, right? Now it's 21%. And last week, there was a 16% chance, at least based off statistics, that we'd see a 3 to 3.25% rate hike in total by the time we get to December. Now it's 36%. See this? Now the lower projected rate hike targets, they have less probability. Higher rate hike probabilities are going up. So it's more probable that the Fed is going to be more hawkish. It's more probable that the Fed is going to be raising rates even more. The market priced in, or it came close to pricing in, 50 basis point rate hikes for Let me see the months right here for the FOMC meetings. So hold on. June, July, and September, we projected 50 basis point rate hikes, right? That was what we thought. Like in June, they increased rates by 50 basis points, 50 basis points. Then July, the same thing. September, this is what was priced in. What if inflation stays high? What if, you know, what the Fed is trying to do isn't working as well as we would have anticipated? This means the Fed could get more aggressive. The Fed may raise rates by 75 basis points instead of 50 basis points during one of these months. They have all these meetings coming up. We don't know if that's going to happen. And the risk of that just went up considering that inflation is still high. The Fed may have to really pick things up, unfortunately. And if you don't even want to trust my word for it, look at what Elon Musk just tweeted. This is a massive thing that just came out from his Twitter page. This person right here, I'm not sure exactly if they actually stated this, but it might just be a meme or a joke. But they stated that on God, 8 years of 0% rates was bussin', but inflation is mid, so we need hike 75 basis points, no cap for real. So it's kind of a joke, but Elon Musk said real talk to this. So he's saying we need, this is the quote, we need hike 75 basis points. We need a 75 basis point rate hike, which is not necessarily priced in just yet in the markets, right? If we get it just one time during one of these FOMC meetings, that means that there could be a little bit more downside potential for the markets. I did preach, or at least mention this in the past, that I don't think that Tesla or these mega caps or large caps found their true bottom just yet. I talked about a temporary relief rally. It's temporary for a reason. So that doesn't mean that we're just going to just kind of like die out from here on out. It doesn't necessarily mean that, because what we're going to have to wait for is what PPI data suggests. That's the producer price index. And then the next FOMC meeting, which is between the 14th and 15th of June, the 15th being the big day, right? That's when we find out what the rate hike will be. And that's where things become very important. So next week is going to be a big day for the markets. And when it comes to Tesla, okay, I'm very optimistic. I think this thing is going to break all time highs again in the next upcoming, like, I don't know, by next year for sure. And also, I think that by 2026, Kathy Wood is most likely correct about that 4,600 price target, right? I'm still very bullish. But for the short term, for the next few months, things may not be ideal. Let's just leave it at that. Now, before I talk about where you should be looking out for Tesla, I want to talk about other things Elon Musk mentioned. Look at this previous tweet from Elon Musk. This was actually tweeted a couple of months ago. Elon Musk said, if history is any guide, not many will make it past the next recession. Zach replied with, when do you think the next recession will be? Where Elon Musk responded with, predicting macroeconomics is challenging, to say the least. My gut feel is maybe around spring or summer 2022, but not later than 2023. So that's what Musk predicted the next recession would be. Elon Musk also stated this about a week ago. He stated he feels very bad about the state of our economy. He also wanted to make changes about Tesla. Now, Tesla is still going to be growing, so they're not necessarily losing jobs, so to speak. They're still going to gain these jobs, but and the media did exaggerate about the cuts, right? I'm not going to go into full details about that. They could be misleading, but at the end of the day, don't worry about the second part. Worry about what I highlighted. That is, he does feel super bad about the state of our economy. And that is something we have to be focused on. So, what does this mean for the future of Tesla? Okay. If I bring up the daily candles, try to make it look like this. Unfortunately, Tesla did hit 620 in the past. We got that temporary relief bounce, and it didn't go as high as I thought it would. Now, what could happen is we could kind of stay stagnant in this range. We could kind of hold that 680. Hopefully, at the time of recording this, we could hold that. If we don't hold that, we're gonna probably drop it back down to that $650 level. Now, I don't see that happening today, right? I don't really see it just yet. The market is open at the time I'm recording this, but it is something you need to be prepared for. We do have a gap up here, so it is possible we kind of hold this range for some time. But like I mentioned in previous videos, the next upcoming months, the next upcoming weeks, I don't know the exact time, but I will tell you guys one thing. There is concerns about a recession. If that's announced, if if we find out around July or August, whenever we find out that we're actually in a recession, it could get not necessarily ideal for Tesla or the entire market. It's the uncomfortable truth. But I want to just tell you something, okay? Musk gave us many warnings. This is not the end of the world. This is an opportunity. It's an opportunity to buy more shares for cheap. It's an opportunity to learn how to trade if you don't really know how to. This is a very tricky market to learn in my opinion. And if you could learn how to trade in this market, you could become very successful in future markets. So, this is a good learning opportunity. This is also a very good time to be buying those shares at those really good dips because remember, I believe in what Kathy Wood said. That's a 4,600 price target by 2026. It may even go higher than that, considering we have the Cybertruck coming out next year. We have the Roadster. We have the AI coming out. AI Days coming out soon. Tesla's developing a humanoid robot. The company is fantastic. I'm super bullish. So just see this as an opportunity. Yes, there will most likely be more downside in the future. Could we drop lower than 620? Yes. I actually think that's a possibility. I did calculate, excuse me, the bottom a couple of weeks ago. So, right, there may be a new bottom. We could go to the 500s in the future. It's just me being realistic, but it's not the end of the world. Like I said, the company's bright. There's going to be a strong recovery. If you sell everything at the bottom, you're going to miss the recovery, which I believe will come in the upcoming months by next year for sure, in my opinion. So stay strong, okay? Don't let any of your emotions get the best of you. I also want you to educate yourself during times like these. Okay, the economy is going through this disruption. Okay, it's going to be kind of insane for some people. Things are becoming unaffordable. This is the time to learn about finance, educate yourself, invest in assets, and just keep on learning. Never quit. Keep your heads up. We will recover from this. So stay strong. Thank you. Good opportunities are here. Tesla will go to the moon in the future. And I will see you guys in the next one. Enjoy your weekend. Tesla to the moon. And peace out.